Lately, Disney stock has been out of favor, but I am not only holding my position in the stock, I am actually increasing it for some of my clients that didn't have an opportunity to get into it earlier when I had originally purchased the stock. You see, I think that Disney is still full of magic, and let me tell you a couple reasons why. Let me show you a couple things about the way Disney stock has been performing, and so that you can follow along at home, I'm going to use Yahoo Finance. Now I have a 2-year chart brought up of Disney, and you can see that as of late, as I mentioned, it has been out of favor. Earlier last month, it broke through very strong support at the 50-day moving average. It also broke through the 100-day moving average. And you can see how it's fallen precipitously. That's not a good sign. However, I don't just look at chart fundamentals. I also look at trends over the short term, near term, and long term, and I also consider fundamentals. But even so, let's start out by looking at this chart from a technical standpoint. Number one, right now, Disney is holding at its 200-day moving average. Now I think what also is telling is that Disney is holding at a short-term horizontal trend line. That's very important, and you can see how it tends to converge right there with support at the 200-day moving average. I like to see that type of multiple support when I'm looking at technicals on a chart. Disney is also holding up very well on a long-term chart, so let's look at this over a period of 5 years. You can see here on this longer term chart that we also have the convergence of the 4-year moving average and the 8-year moving average, which again, the stock appears to be getting support at. Again, that, in my opinion, is something that shows stability from a technical standpoint. Well, what about fundamentals? Well, let's go over and look at some charts from finviz.com. You can see that consistently for the last 5 years, earnings per share have increased. Likewise, and in some ways more importantly, revenue have also gone up consistently over the last 5 years. The reason that's so important is that we've been in a really stagnant economy where companies have been able to use some balance sheet engineering to constantly show improved earnings, but they haven't always been able to produce real concrete revenue gains. Disney is an exception to that, and although it's not as growing as much as I'd like it to, it certainly is performing much better than other companies of its large size. And then also from a fundamental standpoint, let's take a look at what Disney's doing with buybacks. You can see that over the last 5 years, they've been consistently buying back their shares, and so there are less shares outstanding. These 3 things, I think, are a key to showing that Disney has strong fundamentals. Now, one of the reasons that Disney stock has not been performing well is that there's been a lot of news lately that's been negative for media companies in general. So some of that has overshadowed onto Disney, and that's despite Disney's strong fundamentals. But I think one of the things that's really had a large impact on the price falling recently has been a story that's been hyped in the news that attendance is down at Disney's theme parks. And while that's true, you have to understand that's part of Disney's strategy. Their parks are operating at capacity, the lines have been extremely long, and so to make the customer experience better and to make the lines shorter, Disney raised the prices. So while it's true that attendance at the parks are down, what is equally true is that the profit margins are way up. You see, Disney is one of the few consumer product companies that really has strong pricing power. And so I think people are misinterpreting what's going on at the Disney theme parks. There's still a lot of love there, and Disney is making a huge amount of money with its parks. And so for all of those reasons, I'm not at all concerned about the recent dip in Disney stock price. In fact, I think it's a great buying opportunity. My personal opinion is that from these levels, the stock can easily appreciate another 15 to 20% over the near term. Now, you need to do your own homework, and as always, invest cautiously. I'd also encourage you to tune into the full audio version of the Wealthsteading podcast. Until the next episode, this is John Pugliano wishing you the very best returns.